the next corporate on our radar. The company saw revenue growth in the fourth quarter, muted one. But for FY23, revenues were up 16%. Margins for the full year saw a decline due to increasing energy costs in Europe. Ramesh Gehaney is Executive Director and COO at the company. He's joining us right now to take some questions. Mr. Gehaney, great to have you with us here. Thank you very much for your time. I just want to start by focusing on Europe. In the fourth quarter, the European revenues went up about 8% year on year in euro terms. There was some recovery in car registrations there as well. Could you tell us how are things shaping up in the new year in FY24, and what are projections for that geography according to you?
Well, Q4, good morning everyone. Q4 has been showing better results, but what I understand overall the sentiment is a bit low because of the inflation issues, and otherwise what people are trying to do is readjust themselves to the business environment over there. Like we have acquired businesses for EV platforms and so on, and some kind of compensation has come from the government and the customers for the energy cost increases. So these are the positive signs. But the new car registrations, although up, the productions and the production of the OEMs have also increased, and it seems there's a feel that maybe the stocks at the dealers' point will increase, and there will be some inflationary pressures and some downturn expected by the year end. So that's a fear of sentiment.
So on the top line for Europe, in terms of volumes, you're still a bit cautious. What about in the margins? Because gas prices have started falling in Europe. Do you think this will aid the margins that the Europe business clocked in? Can it be higher in FY24?
Certainly, yes. See, if you compare what the energy cost and gas prices went up by almost 100%, which was absolutely absurd. Today, we are finding that the energy prices are just about 3 times from the lowest. And some part of compensation has also happened from the OEMs. The good part is that energy has now become an indexing element for our industry. So anything which goes down or up, is getting indexed, and the impact is not as much. But if you look into what is happening currently, that the energy costs are coming down, and which will have a positive impact on our margins.
Okay, do you want to quantify that, sir? Better utilization levels at a couple of your plants, Halol, Karnataka as well. Can you go to 13-14%, mid-teens? Is that doable in this year, given that input costs have cooled off? Capacity utilization will move up as well? Yeah.
See, I see no reason why that should not happen. The kind of strategies which we have built up for ourselves, you mentioned about Halol, we picked up some extra orders from our customers for some around 2,000 assemblies per day extra. So that's related to Halol. Other Indian customers have also given us extra orders. Our order book has been close to 935 crores this year, out of which we've got EV business wins also. So I see no reason why we should not be inching towards better margins in the coming year.
Better would be 14%, 15%? What would it be?
Let's not put a number, Nigel, let's not put a forward-looking number onto that. Our endeavor is always to improve every goalpost that we reach.
Okay, that is overall margins. So let's keep it between 13 and 15% without getting very precise. But in Europe, where you've seen improvement in margins to almost 17.5% or so, there is it looking a little more certain that you'll be able to hold that level this year?
Well, it all depends on the commodity prices also. In case there is an impact of commodity prices which is delayed in indexing or whatever, there can be some variation in the margin. But I also, from Europe perspective, I see no reason why we should not get at higher levels, because our order wins have been pretty aggressive and pretty promising.
Your order wins have been pretty strong. I think you have a request for quote of about 2,600 crores from OEMs, which gives you great visibility of the possibility of revenue growth for the India business. Can you talk about what the India business numbers could look like in FY24?
Again, I would say that we don't normally put any forward-looking numbers, but we have always been outperforming the industry. As you may have seen this year also, the industry was just about 2.9% up, or on overall basis, it was 11.8% for all categories, and we have performed 16.6%. But if I look into the space of only two-wheelers and three-wheelers, where we are dominant, or our larger share of business comes from there. Our increase is around 16.6%, whereas the industry has grown only 3%. This is in spite of the fact that the export market of motorcycles has come down quite sharply. Close to 25% is the export. This is in spite of the fact that approximately 3.9 or 4 million vehicles from the peak of previous years seen are still missing in the system. The total volumes are lower by 4 million vehicles as compared to the highest that we've seen before. In spite of that, our sales is up by 16%. So I'm sure, the way we are proceeding and the way we are collecting our orders and our focus on our business model, I see no reason why we should not be improving from here. As far as new business wins are concerned or RFQs are concerned, which you mentioned, our generation of RFQs is always close to 2,600 to 3,000 crores. It's more important is what's the conversion ratio of that to new business wins.
All right, Mr. Gehaney, final question from my end on the EV part of the business. Out of the total order inflows, I think 1,000 crores or I think 30-40% was from EVs, right? In the last year, the new wins that came in. Could you tell us what is the outlook for this year? And also EV as a percentage of your revenues, how much will they constitute?
See, I can only tell you that EV is now moving up as far as the revenues are concerned, and even the volumes in the market are increasing. Like I believe that 780,000 vehicles have been made, which is close to 200% increase against the previous years. So it has gained traction on the numbers as far as vehicles are concerned, and our business wins have been close to 600 crores in the past, and we have won businesses in brakes, in castings, and suspension. For all these product verticals that we have been acquiring new businesses in EV segments also.
All right, Mr. Gehaney, we'll leave it there. Thank you very much for joining us, and it's a pleasure speaking with you here on CNBC TV18. Good luck, sir, and till next time. Well, you've got the market, which